welcome back. You're watching the commodity trade right now. Now let's bring commodities into focus in terms of how they're doing today in the trade. Looks like on LME again, aluminum is almost trading with positive bias. In fact, let's look at the MCX screen here, and that will tell us gold, silver prices are trading almost 0.4% up, so it's a good day for precious metals. On the metal side, copper again is up 0.2%, aluminum up 0.4%, nickel is up 1%, lead, zinc, in fact, they all actually are up almost 1% or 0.5% each here. Cotton prices are up 1%, a touch from the agri side here. But in terms of China, again, the Asia trade, the steel prices have moved higher. I know prices have moved higher. In fact, the zinc prices actually are up 2% right now in the Asia trade here. So it looks like a good flavor for the metals and precious metals today. Oil prices, the Brent again is holding ground around 75. WTI has crossed the $70 mark here, almost 3.5-year high, where again oil prices are trading right now. So it's looking like almost a positive sort of a trade going on across commodities here. Now let's try and understand basically what it implies for strategies, for an outlook, which ones perhaps you should be preferring here in the commodities here. With our guest today, Vijay Bhamwani from bspindia.com. He joins us live in the studio. Vijay, welcome to the show. Now, no secrets. The last time we talked about, you had a bullish view on oil prices. Oil prices are going higher. There is a recovery now in the commodities, including base metals, aluminum again. So let's first start talking about the oil prices here. Is it a good time to initiate long positions in a broader sort of bullish framework here?
Good afternoon, Piyush. Thank you for having me on the show again. Yeah, I was here on 30th of April, and I did say my top pick would be crude oil prices for the simple reason that crude oil on the charts is looking like it's going to move 2 steps up and 1 step down. And right now it's on its way up. You've cleared the threshold of $70 a barrel. Should you initiate fresh longs? If you have a clear conviction-based view that you're going to dig your heels into the ground, pitch your tent and stay there for a while, yes, probably. But then you should also remember that $65, $66 would act as a weak support, and 63 would be a much stronger support here. On the upsides, will it edge towards $75 to $77 a barrel? I'm talking of WTI crude here. Possibly, yes. And where base metals are concerned, you touched upon aluminium, which I have been talking about your channel since about a month. We talked about how traders were kind of negatively surprised when they were short from the 145 level onwards. So in technical parlance, it was a resistance which was overcome, which now acts as a support. So 145, 147 is now a floor. On the upside, my guess is aluminium will try to test about 4 or 5% higher from here. Whether it will sustain is a question mark. I don't see the previous peak of 18th or 19th of April coming in a clear hurry. Upsides will meet with unwinding. Let's not forget, the Chinese have seen a current account deficit for the quarter for the first time after 2001. So that's going to be a worry because almost 20% of all base metals are consumed by China, either for domestic consumption or for re-exports.
Right. So Vijay, in that case, I'm going to ask you more on metals here, but then first let me ask you on oil prices here. If I look at oil prices, primarily again, there has been a sort of a mixed cues coming out from the way commentary is coming out here. Venezuela, again, there is economic crisis going on. Now, we can argue that perhaps the output is not as much as we should be worrying about Iraq, Iran, or Saudis again here. But the second, again, Iran, basically, the commentary came out from the Iranian officials that they actually don't want much higher oil prices here. So is that a rhetoric, or is it something perhaps which you think could be influencing some trade pricing here?
Piyush, if there's anything I've learned in 32 years of trading the markets is not to pay attention to the noise. We talked about how nothing would really happen between the US and the North Koreans. It was nothing but posturing. Let's not forget who stands to gain from oil prices going up. All exporters would stand to gain from oil prices going up. Who would be one of the biggest beneficiaries of oil prices going up? Saudi Aramco, of course, is a very, very obvious leader here. But let's not forget, the US is a net oil exporter for the first time after the Yom Kippur War of the 1970s. So US itself would stand to benefit from oil export dollar revenues. I think everybody wants higher crude oil prices, and that's where they're headed.
Right. So, in fact, all exporters again basically would be benefiting from this here. But then also, Vijay, another sort of analytical view of seeing that is, uh, are you slightly cautious, or I should say, in terms of the way open interest is building? Because again, if I look at the Shanghai data, that tells me all-time high open interest. But again, that market is just in a nascent stage. If you take a look at the US markets again, there is no sort of major cool-off which is happening in terms of open interest here. So, is it a time where everybody is bullish? It's a one-way street, or perhaps the open interest addition is making you slightly cautious here?
I would agree with you partially that open interest being at these kind of high levels would also invite a contrarian view. But my guess is the weight of evidence is completely tilted or biased towards the bullish side. So open interest in this case, I would take as a positive weight of evidence or corroboration of my hypothesis that crude oil is likely to remain firm. Sure enough, there will be dips, but like I said, 2 steps up, 1 step down only.
Right. So Vijay is absolutely clear, completely bullish on oil prices here. So that's the take on oil prices. Now, before we talk about gold and silver, let's first talk about base metals here, because that's where actually the action is happening today. Vijay, let's first, you just talked about aluminum prices again, but then also I want to ask you on zinc prices. What's the outlook there? There has been a small rebound in zinc prices. Yes, on the LME again, we're not talking about 3200, 3300. The prices are still actually trading at lower levels here. But there has been some buying in Asia trade also. Again, zinc is trading 2% higher. Is it a good time to initiate long positions? Like, what would be your view here?
Piyush, I lack the conviction to go long in zinc at this point in time, at this price point. Maybe given deeper declines, yes, but at this point in time, I'd rather let the parade pass me by than take a high-risk punt on going long on zinc futures.
Right, but is that a sign that actually you basically are bearish on zinc, or you just want to avoid and just wait on sidelines at present?
I'm not exactly bearish on zinc. I think the base metal segment might just see some more blip ups, but I'm not convinced that the blip ups will actually sustain at higher levels. That's the reason. I'm not very skeptical of the prices going up. Is the sustainability that I'm questioning here.
Right. So zinc perhaps where again the conviction is less as what Vijay is saying here. But apart from that, what's your take right now on nickel, copper again? Nickel we know actually after the recent correction has been moving sideways, but broadly on copper and nickel both, any good entry points which are looking at the prices currently?
If by any stroke of fortune or coincidence or whatever you want to call it, nickel was to fall, say, to 880 or 875 levels, which is a good $60 lower, I might consider taking a small bite on the long side where nickel is concerned. Where copper is concerned, I'm seeing the range between 430 to 475 on the upside. Either give me deeper declines to kind of value buy in copper, or technically speaking, give me a breakout above 475 before I can contemplate doing anything there. Till then, copper is likely to be in no man's land with the bias in the absolute near term due to the base metals seeing a blip up. It might just edge up a little higher, but here again, like I said, sustainability is something I'm not really convinced about.
Right. And let's come back and talk about aluminum here. You have given us a level, so you were just talking about it. But broadly again, why do you think, apart from the trading sentiments, is there anything on the ground which has improved in the European market? Broadly, like on all the supply chain linkage to Rusal and the sort of other sort of inventories, is there anything which has shown some signs of improvement for the aluminium, or it's just the trading sort of swings which are happening there?
Piyush, I think it's more of a dead cat bounce. Let's not forget the Chinese, in addition to inventories, have a huge amount of shadow inventories, inventory that doesn't appear on the books. Take a look at what kind of a metal aluminium is. Second most commonly found metal after iron. And it's not that aluminium is running out of supply in the global commodity markets. Your LME inventory is at a month high, if not 2-month high already. So we are seeing comfortable stocks. It's a dead cat bounce. Like I said, it may not really go up to the April 18 or 19 highs. At higher levels, I would question the sustainability of aluminium advances here.
Right. So I can clearly see that except oil, I think where actually Vijay is absolutely has very high conviction here. I think on metals perhaps there is a bit of caution the way actually it's sounding here. On gold and silver, what's the word here, Vijay? Again, because if I look at the data, that tells me the recent CFTC data again in silver. There is a switch to a net short position now, almost 23,000 contracts here. There has been a reduction in the contracts on gold also. Again, net long positions have been cut by almost 50% again now, 62,000 contracts. Now the net position is only 51,000. So again, there is a sort of reduction which is happening here. So gold and silver, is it primarily because the dollar, again, the trend is getting stronger, and that's why actually traders are switching to a sort of reverse position here?
Piyush, a lot of retail investors tend to err on the side of the market. So, if at all there have been minor profits on the long side, my guess is weaker hands tend to exit first with whatever minuscule profits they have, which is what might partially explain your lightening up where open interest figures are concerned. If at all you're expecting higher crude oil prices, now gold and crude tend to have a linear correlation. If crude prices are going up, there are inflationary concerns, and therefore it tends to drag gold prices up also. The only negative for bullion is a strong dollar. If at all the dollar is strong, and bullion and dollar are inversely correlated. So the only drag on bullion would be the dollar, and I don't think this time around the dollar will be able to drag gold down or silver down for too much and too long. I think 2018 calendar year is clearly a year for the bullion bulls. I think the markets might get positively surprised on the upside in calendar 2018.
So if you have a 2018 bullish view, Vijay, what would be a right entry point here, both on MCX gold and gold dollars here? Gold dollar, again, the positive sign is that gold is not breaking $1,300. I think that's the biggest sort of support, or I should say the weightage which has been ascribed in the last almost 4 or 5 months here. But on both MCX gold and gold, again, what should be a good near-term strategy here?
Well, where dollar gold is concerned, let's keep a further cushion of $20 from the 1,300 mark. So 1280, 1285 kind of dollars would be a very comfortable level if at all international players are looking at buying here. On the MCX, if you are a trader, you might just consider a punt. But then I think it is a better proposition to go for deliveries both in the physical segment or even via the ETF route, because you automatically cut down the cost of carry and financing charges. So by all means, even at present levels, traders would do well, provided, like I said, you're pitching your tent in here and digging your heels into the ground.
Right, and what's the word on silver here? I guess somebody was trading in silver. What's the sort of trade perhaps you could be ascribing?
Silver, like I mentioned on your channel the last time around, I am very uncomfortable with the kind of cost of carry or financing charges which are significantly higher as compared to gold, where silver is concerned. In this day and age, when you're getting 6.5% on a bank fixed deposit, to pay 14, 16 and 18% cost of carry on silver is a criminal expense. Unfortunately for silver, there are no ETFs around also, which leaves you with a very small window of opportunity, that is physical deliveries in silver.
So, no, Vijay, but also in the sense of near-term strategy, is there anything which perhaps you'll be having a view, either bullish or bearish, if somebody wants to take a position here?
Let's talk about it in percentage terms. I think getting a 15 to even 18% rally in this calendar year in silver would be a fair chance to kind of hope for.
Right, so that's the view coming on gold and silver here. And Vijay, anything in particular, if you like, on the agri commodities, if actually that's something which you're observing right now?
Piyush, agri commodities suffer from want of liquidity in our market. So that basically is a put-off for traders who are looking for very liquid counters in an easy entry and easy exit kind of a scenario. So I would like to keep my hands off agri at this point in time at least.
So oil and metals, again, they remain the focus here. Oil definitely, again, has a bullish framework. Now, the only 2 points of caveat again is that in terms of oil prices, again, while the prices are scaling new levels here, there has been a mild reduction in the contracts in WTI, but broadly on Brent, again, it almost remains the same here. But yes, in terms of positions, again, as Vijay was indicating, it looks like a quite a sort of bullish setup which is happening for crude price. And earlier in the show, we are talking about dollar also. So both, again, they are actually seeing some strong trends in terms of open interest additions also here. Thanks a lot, Vijay, for all the views and insights into commodities and what we should be expecting and focusing. The focus, again, clearly is on oil. Base metals, again, the verdict was very clear. Perhaps sustainability is at present a question mark, and a follow-up sort of buying, whether it comes or not, that's, I think, is in focus right now. With that, it's a wrap on this edition of the Commodity Trade. But stay tuned, because news and updates, they're going to continue on the other side. Thank you so much for watching us.